Welcome to accounting. Your homework that you're turning in 10-1 on your own, 10-2 audit your understanding, and page 296 why accounting. Page 296 why accounting. Number one, Prisonville is home to a large prison facility. Most of the prison employees live in Holmesville, which is 20 miles away. Name one advantage and one disadvantage of this situation to Prisonville. So some sample examples. Advantages may include employees spend money in Prisonville during the lunch breaks by eating in Prisonville restaurants or buying other items, and Prisonville will not have to buy new schools to serve the children of prison employees. So they get all of the plus side of having people in their town without having to have the supporting services associated with residents. So some of the disadvantages could include employees will not spend their money in Prisonville, but will go home to Houseville to buy groceries and other necessities. Employees are not nearby, which means that Prisonville's social service agencies may have difficulty finding volunteers. So whether it's coaches for the ball teams or people that work in homeless shelters, whatever that is, those people don't live in that community and support it outside of work. And new employees coming from other cities may realize that many prison employees do not live in Prisonville and will do the same. So you do need some residents in order to help pay the tax base that pays the police department, fire department, all the prison, all of that stuff through their taxes, property taxes, things like that. Okay, number two, what factors should Houseville consider when deciding whether to build its own prison or to send its inmates to Prisonville? Houseville must consider today's costs. Immediate costs include all construction, include sewers, roads, and other infrastructure items that will need to be developed for the prison. Cost of obtaining the property for the prison site and loss of taxes if businesses are moved because of the new prison. And Houseville will also have to estimate future costs connected with the operating of the prison, such as employees, prison administration, food, equipment, medical facilities. The costs will change as years pass. Houseville must consider all of these costs and compare them with the cost of sending prisoners to Prisonville. So there are pros and cons. Um, right now, they're sending all their prisoners to Prisonville, and they're probably paying a fee for that. That fee may or may not be equivalent to what it would cost them and to have their own prison. So it's kind of an economies of scale. The likelihood is the more prisoners they're paying for, it might be cheaper to do it on their own. And if it's just a few and they're paying an annual rate or something like that, it's probably cheaper to outsource it to another community. Okay, so today we're going to talk about posting sales on account to an accounts receivable ledger and a general ledger. This is very similar to what we did um, last chapter when we were posting purchases. We're going to have a sales journal. We're going to have sales ledgers. We're going to have accounts receivable, which is part of the general ledger. So it's going to be, it should seem a little bit familiar to you. All right, so we have a sales journal and we have a customer ledger. And we are going to move things from the sales journal to the customer ledger. Write the date and the date amount of the vendor account. They really mean customer account. So we're just going to slide that down. Write the sales journal page number and the post reference column account. So we're going to take the sales journal page number and we're going to put S11. S stands for sales journal. And then we'll write the debit amount in the debit column of the customer account. So right here it says accounts receivable debit. And that's how you know it's going here, right? Add the amount in the debit column to the previous balance in the debit balance column and write the new account balance and the debit balance. So we have a debit balance, we have a debit transaction, so we're going to add those together to get 2462.27. And write the customer number in the post reference column of the sales journal. So we'll take the customer number and put it back there, post reference. Now we're going to total, prove, and rule a sales journal. And we have a single line right there. It's hard to see. And we need to date it. We need to write totals, column totals. We're going to add these up. And then we need to double rule underneath each total. That tells us it's a total. All right, now posting totals of a sales journal to the general ledger. This is not new for us. We did it last chapter with going from the purchases journal to the general ledger. So first thing we're going to do, sales journal, we're going to take the total to accounts receivable, into sales, into sales tax payable. We'll do all these accounts one at a time, but it's just showing you where it goes. We need to take the sales journal page 11, put S11 in the post reference. And then we're going to take from the accounts receivable debit, we're going to go to accounts receivable and we're going to put this total there in that debit column. And then it's a debit balance, it's a debit entry. We're going to add them. We're going to take the account number from accounts receivable and we're going to go back and put it right there in parentheses. That tells us that we booked this number to the general ledger, and that's the account number that you can find the entry in. And that's the same all the way down for sales. Sales credit right here, 4110, and there it is right there. And if you look at the total, 8637.50 credit, it's going in the credit right here. That's the sales account. Credit balance, credit entry, we add them together. And then we do the same here. We have 2120, tells us this account. We take that amount, put it in the credit because it says credit right there. And then we have a credit balance and a credit entry. We add those. Actually, we don't have any balance, do we? That was a flat line right there. Zero balance. All right, 10-2, audit your understanding. What accounts are impacted and how by the posting of the special columns of a sales journal. So 1, accounts receivable is debited. 2, sales is credited. And 3, sales tax payable is credited. List the 5 steps for posting transactions to accounts receivable ledger forms. Write the date. Write the sales journal page number in the post reference column of the ledger account. Enter the debit and credit amounts. Calculate and record the new account balance. Write the customer account number in the post reference column of the sales journal. Okay, so work together. I'm going to include it in a separate video. And then your homework tonight is 10-2 on your own, 10-3 audit your understanding, and page 299 global awareness. If you have any questions on any of this stuff today, go to today's discussion board topic and ask, and I will be checking periodically through the day.